Hello everyone and welcome back to another video with Business with Professor Team. This lecture is going to be focusing on the introduction to accounting, looking at the concepts, methods and usage of accounting, but also looking at the statutory requirements for different legal entities. Accounting is split into two segments, management accounting and financial accounting. Both accounting systems work towards providing a service to internal and external users. Management accounting seeks to meet the accounting needs of managers and owners. Management accounting is only used for decision making within the business, and essentially it is used internally only. Financial accounting, on the other hand, seeks to meet internal and external users such as customers, competitors, government, lenders, and suppliers. Accounting is based on information. Accounting essentially is an information system providing information to internal and external users. Now, when we produce an account, we start with the information identification, that's one. And then we move to the information recording, that's two. And then we move to the information analysis, which is three. And lastly, we move to the information reporting, which at this stage, we have our final product, which is either a balance sheet or the statement of income, comprehensive income. So here we have a financial accounting system which shows the inputs all the way through to the output. Now, financial accounts uses economic events, mostly historic events, and then we go through the processes of collecting that information, measuring the information, storing the information, analyzing the information, reporting the information, and managing the information. And then we use all of these processes in order to come to an output of the finished product, which is a balance sheet, an income statement, statement of owner's equity, and statements of cash flow. And now this output is now used by various users internally and externally, and then the cycle goes on again. Management accounting information system has more inputs than financial accounting. Management accounting uses historic events, financial account information, non-financial account information, subjective information, goes through the generator of the processes of collecting, measuring, storing, analyzing, reporting, and managing, and then the output is more specific and it's more tailored to the needs of the managers or owners, so we can have a special report, product cost, customer cost, budgets, and performance reports. And these are used by internal users. And then again, the process repeats when the time is appropriate. So accounting systems are used internally and externally, as we have stated previously. Now, who are these people that are going to be using financial reporting? We have the bank, owners and investors, and then taxation for statutory requirements and legal requirements as well. And then management accounting, which is internal use, is to determine the cost per unit, evaluate the performance, and then non-routine decision making. When looking at management accounting and financial accounting, there are different things and elements that make management accounting what it is and financial accounting what it is. Now, the intention behind the accounts will determine what type of account it is. So if it's for internal use only, we know that that is management account, and if it's for to provide a holistic overview of the organization, we know that it is financial accounts. So the nature of the accounts produced for management accounting tends to be specific. The level of detail is very, very detailed because it tends to zoom in and pinpoint, or one can say laser focus on a specific dimension of the organization. Now, the regulations for management accounting is unregulated, whereas financial accounting is heavily regulated. However, management accounting is unregulated because it is focused on providing managers information for internal use only. The time orientation that is used for management accounting tends to be based on projected future information as well as past information. So when we look at financial accounting, we can see that it's only historic events, but sometimes you can use future events. But in management accounting, there is a lot of overlapping information based on previous events, which is historic events, and future projections, which is a forecast. And then the range and quality of information provided tends to contain financial and non-financial information, often uses information that can't be verified. So when we look at financial accounting, we can see that it focuses on information that can be verified. So things like inventory and inventory and revenue, which can be verified, and it has an auditing process. However, for management accounting, it can't be verified as easily as one would want. But however, it doesn't need to be verified at great extent because it is only intended to be used within the organization. Now we look at financial accounting, and the nature of the reports produced in financial accounting tends to be general purpose, tends to give a wide snapshot of the business, whereas in management accounting, it gives a laser focus or a zoomed in perspective of the organization. So financial accounting tends to give a general holistic view of the organization. The level of detail in financial accounting tends to be very, very broad. It gives again a wide snapshot of the entity. The regulation usually financial accounting is subject to accounting regulations, FIRR, and all the regulatory bodies in accounting. So financial accounting needs to meet the standards and requirements of the accountancy policies and procedures. Reporting intervals usually is annually or biannually. Time orientation used in financial accounting is almost always historic, looking at previous events, but sometimes, and it's very, very rare, but sometimes you can look at information to predict the future and use future information in financial accounting. However, this is very, very rare. Now, the range and quality of information used in financial accounting focuses on financial information, great emphasis on objective and variable evidence. So financial accounting is more based on facts and things that can be verified. However, management accounting, one could say, is subjective and it is open to interpretation. However, financial accounting, it is very, very rigid, and it is very, very strict in the way a financial account must be produced. Now that we know what accounting is, the processes of accounting, and the usage of accounting, it is time to put it into context and look at how accounting is used in different entities, what accounting procedures are used in different legal entities, the statutory requirements, and what liability entities have in terms of accounting. The first entity that we're going to be looking at is a sole trader. The definition of a sole trader is an individual who is the sole owner of the business. This type of business tends to be small. It is easy to start up, no formal procedures are required, and operation can start immediately once registration is done via company house. Now, if you require special permission or licenses, you won't be able to start trading immediately. You will have to wait for that license or for that grant to be granted. So if you need health and safety certification for food, or a license to operate heavy machinery, or a markets trading license, you will have to apply for that and apply for those special requirements. And once that is granted, you are then a sole trader and you can now commence your business. But usually a sole trader can start up their business and start running immediately. The accounting requirements for a sole trader is very, very simple. The owner must produce accounting information to satisfy the taxation authorities, there is no legal requirements to produce accounting information relating to the business for other user groups. However, some users can demand accounting information about the business and may be in a position to enforce their demand. So, as a sole trader, you don't have to produce an account which is audited or which is put on the stock market, because you're not a company who is on the stock market. So, your accounting information is basically for um, the authorities to make sure that they can deduct your tax adequately. However, people like your bank investors and other users can demand that you produce accounting information so they know what is actually transpiring within the entity. That is only for a sole trader. Now looking at the liabilities of a sole trader, the law doesn't recognize the owner separate to the business, so the business will end on the death of the owner. A sole trader has unlimited liability, which means that there is no distinction between the owner's personal wealth and that of the business. If there are any debts to be paid, the business will have to pay for it, and if the business can't pay for it, the owner of the business will be liable to pay for the debts of the business using their own personal wealth or personal assets. Now we look on to looking at partnerships. The definition of a partnership is where two or more individuals carry on a business together with the intention of making a profit. They are usually quite small in size, although some partnerships can be on a large scale, easy to set up as no formal procedures are required. So a partnership is very similar to a sole trader. The only difference is that there is more people in ownership position of the business, whereas a sole trader is only one person who is the sole person responsible for the business. A partnership is where you have two or more people who are responsible for the business and they go into business together with the intention of making profit. The accounting obligations and accounting procedures for partnership is very similar to a sole trader. The owners must produce accounting information to satisfy the taxation authorities. There is no legal requirements to produce accounting information relating to the business for other user groups. However, some users can demand accounting information about the business and may be in a position to enforce their demands. Looking at the liability a partnership has, it is similar to a sole trader. The law doesn't recognize the owners separate to the business, so the business will end on the death of the owners. Partnership is not recognized in law as separate to the owners. So when it comes to debts and paying debts, the personal assets of the owners will be used if the business can't pay the debt. Now we look at a limited company, and a limited company can vary from a limited company by itself or a limited partnership. Now this can vary in size from very small to very large depending on the structure of the business. The number of individuals who subscribe capital and become the owners may be unlimited, which provides the opportunity to create a large scale business. The accounting obligation for a limited company or limited partnership is different to a sole trader or a regular partnership. Annual financial reports must be lodged with the registrar of companies for public domain. There are also requirements for the annual financial reports to be subject to audit. Limited partnerships and limited companies have limited liability, which means owners of the company are only liable only for debts incurred by the company up to the amounts that they have invested or agreed to invest. this caps the loss of potential effects or potential assets. So in a limited company or limited partnership, the owner's equity or the owner's personal wealth can't be repossessed to counteract a debt. Once the debt can't be paid by the company will have to go into administration or into bankruptcy, and then the debt is settled. The debt won't be offset by or won't be settled by the owner's personal assets or personal wealth. We've come to the end of today's lecture. Thank you for watching and thank you for staying to the end. If you've liked this video, give it a thumbs up. If you have any suggestions or any comments, please leave your comments below. Subscribe for more videos. Thank you for watching once again and see you next time.